Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a great week this week. So let's start off with a couple things. I did a class this last Tuesday, I believe. Yeah, I think I already mentioned this. So yeah, we had a really nice turnout. We were talking about quality levels. And so, let's start off with what's happening with the markets. And essentially, we kind of been back and forth and gone nowhere in the S&P, right? We came right down to 3,900. And I think a lot of people, we got options expiration. We got a big, massive rally going on. Yeah, how you doing, JT? I think catching a lot of people again, this is what's been happening on time and again. I've been talking about this, catching a lot of people off sides again, because yesterday's sell-off, which we caught some of that, we were in some volatility. I think I mentioned on Tuesday, we were in a volatility play. That kind of didn't work out for us. We put on another one, and then we did really well with the puts on, after the market broke down on Tuesday. And then we covered those puts right near the lows, right around 3,900. And now we're sitting with calls. Yep. And looks like to me, this market is probably going to stay range bound. I would say for the foreseeable future until we get the Fed. We got some huge earnings next week. Netflix obviously helps this week. Kind of a mixed bag. Banks, Goldman is still a drag on the Dow, but that was able to be overcome by some of the other stocks. So yeah, good for you, JT. Yeah, you caught you got a bounce off the on the NASDAQ. We basically also I did a lesson for my members, mean reversion, that I think that 11,300 area, right, JT? Yeah, that was where we basically broke out from the early part of the month. We kind of came down there. We had a couple of wicks that were basically buyers came in and essentially came right back down again, tested those levels, and then took off. But again, the underlying stocks is what's driving a lot of this stuff, right? Yep. So anyways, so where are we at really? At the end of the day, we are essentially just churning and burning here, back and forth, back and forth. But here's the thing, though. If you look at the NASDAQ, remember I talked about this on Tuesday, clearly outperforming. Okay. So this is, by the way, this is Friday the 20th. I'm talking here. I had a lot of requests for people to, so yeah, this is Friday the 20th. And you can see, even as we speak, NASDAQ futures are almost ready to break the Tuesday highs, right? If you're watching your charts right now, we're not that far away, still outperforming, where we've got, let's see. Yeah, so it looks like we're almost, we're very close to breaking out around that 11,757 area in the NASDAQ. So again, Netflix is a big part of that. We've got Microsoft rallying today on the news that they're going to lay off a bunch of people and so on and so forth. So just to kind of recap here, yeah, we're essentially bouncing again. Haven't really, unless you're trading back and forth these ranges. We, in a nutshell, since the last time we were together on Tuesday, we essentially went up to on the S&P. We went up to 4,020 came down to 3,900, and here we are at 3,986. So big swings, big back and forth, 100-point swings, which is not bad. We're trying to capture that more or less on the option side because with the options you can ride out some of the whipsaw volatility that often happens in trading futures. But futures, if you were nimble enough to like JT, we try to catch some of the pullbacks and not get hung up on. So here's the thing: if you're getting hung up like a lot of folks are with traditional thought processes, right? In other words, yeah, the market failed at the 200-day moving average, so now it's going to crash, and that's what got everybody short when on Wednesday, and right. And here you go. And so now the algos are crushing those folks. Similarly, when we were sitting up at over 4K, I think we traversed the 200-day moving average, right? I don't even but I've been mentioning it just because everybody's looking at it, right? So we actually cleared above that. I think there was a lot of chatter about the thrust. Have you guys heard this one? Some kind of thrust bullish thing. Right, that was like back on Tuesday or whatever, right? That was kind of a real bullish thing, and so instead, you're again, you keep going back and forth, but exactly, right? Yeah, and so here's the thing. The VIX, and I've always been talking about the VIX. So what's the deal now? What do you think is going to happen now on the next go round? If this thing carries, which looks pretty good right now, right? You got to admit, it looks pretty bullish right now. If we carry above, if the NASDAQ breaks above, this 11,750 and the S&P gets above that 420, 430. We've already tested those levels numerous times. So I think this go round, we get another burst higher, and it's probably going to be another selling opportunity, right, everybody? If you're following what I'm trying to tell you, right? So by then, the VIX will be down around 17. Again, you'll get a lot more people. And then we're going to, get closer to the Fed meeting. And so that's really a lot of what's going on too. Now, let's talk about, speaking about the Fed meeting, and I've been telling you guys about the bond market and so forth. So looking at the 10-year, you guys know that the Fed has been jawboning, if you will. They essentially have been trying to tell you that they're right and the bond market's wrong, essentially, right? And so I think part of this, we got I think I mentioned to you guys on Tuesday, we got a break above 115.11 on the 10-year futures. If you're pulling up your charts, hopefully everybody has your charts up and following along with what I'm saying, right? So you'll notice we did break out, and now we pulled back hard below that again. And so now I'm looking at, if this is going to be the real deal and the bond market really, continues moving higher, it's got to hold right around that see that pivot low right around 114.08 area. I think that's really what's going to, we got to hold on to that. If not, then I think we're probably going to fall back down. And then, especially if the Fed comes out, they're going to probably do a quarter. Their meeting's a week from this coming Wednesday, right? Next week, actually 2 weeks from Wednesday coming up. So that's going to be really, really important. We got some massive earnings next week. I think we got Microsoft, and so all of this stuff still, which is really, really drives more of this kind of narrative of just kind of back and forth. With weakening economy, the earnings aren't so bad, and the Fed, you got all these cross currents still I think that's why the market just keeps churning back and forth, because you got all these cross currents between the Fed pounding, the Fed on the war path, inflation still high, earnings not that bad, slowing economy. Man, try to think about all that and trade. What's the answer? Don't. Right? Just look at your charts. You'll drive yourself nuts if you do that, right? But that's what's causing the market to churn and burn right now. So, anyways, you get the idea there on that. So that's where bonds are, and I think again, bonds are going to be the driver. So we got to look at bonds, and bonds are now the safe haven trade. So you notice today the bonds actually sold off, and as long as and if we start getting right, JT, yeah. So, anyways, you get the idea. All right, just stick to the charts. That's really, but it's interesting because the charts reflect the collective psychology of everybody, and the fact that we keep churning and burning means that the institutions are confused too. They, one day it's this, one day it's that, and that's what causes all the movement. But anyways, all right, so. That's really all we're, that's on the bond market. That's really the main thing. So it'd be interesting next week. Now let's talk about, the dollar. Also, the dollar, just very tightly coiled up right along that. I think I mentioned to you guys on Tuesday that 1015 pivot low in the dollar index, the Dixie. We try to bounce, and we're kind of just, again, you can see the kind of tight range in the dollar, which is reflected in a lot of the currency markets. And again, as I've been saying here ad nauseum, all I look at is the yen and the peso pretty much, because every other currency, as you see, I mean, you pull up your euro chart, you pull up your Kiwi chart, whatever, it's just, just basically one big mess range, nothing. So those are only the two. So speaking of which, you've got the yen with their monetary policy, and it's also been whipping around pretty good. It's got it formed a level around 79 ish, 78.67. Sold off hard on Wednesday night. Remember, I was mentioning to you guys the Bank of Japan announcement, and then rallied right back up. And so now we're kind of, again, forming this. I think we're going to probably form a big range in the yen between 75 and 79. That would be the levels I would be looking at in the Japanese yen. And if you're pulling up your charts, those are the only, when I do the session in the morning with my members, those are the only two currencies I even, look at, because everything else is the same, right? So, by the way, if you guys want to join me for 5 free days, go ahead and sign up on the link below. Sign up for the newsletter, little promo action. And by the way, I have another class coming up. If you're interested in learning about options, I've been very, very active in the options market lately because of the current environment that we're in. And again, options are a bit more forgiving when you get these massive ranges. In fact, we just put on some trades on USO. We're along SLV, expecting some big movement there. And if you want to learn, I'll be. I don't have a link down below. I think I have a link down below. I'm not sure, but I'll be tweeting out that it's going to be next Thursday. Just so you guys know, if you want the information, you can contact us already, and we'll sign you up even before. We just set the class up today, so it's going to be next Thursday. It's an options class, keeping options super simple. So some of you guys want to kind of a primer or kind of bone up on option trading. That'll be a great class where it's free. So sign up on the link below. Okay, that's coming up a week from yesterday. Okay, all right. Now also, let's see, gold kind of still looking pretty good. But again, this is a dollar play. So the fact that the dollar is kind of stalled out. So here's what's going to happen if the dollar continues lower, if it breaks down and continues down to 100, which is my ultimate target on the dollar index, then gold will continue to rally. But if we do get a strong dollar rally, maybe post Fed or whatever, then all of these kind of related markets, inversely correlated markets like the metals, currencies, will probably have a big pullback. So we're kind of in that kind of foggy area right now where I do believe we're probably going to get a pullback in gold. Silver, interestingly, is not really following the script anymore, right? And what do I mean by that? Well, if you think about it, silver has just been in a big range, but for you futures traders, it's about, clearly pull up your charts, 23.28 to like 25. That's about a $1 range in futures. Even the SIL 1,000-ounce contract, that's not a bad deal, right? That's $1,000, or the standard, which hardly anybody trades because it's so volatile and so pricey. 5K, right? Remember, it's a 5,000 ounce. The standard silver contract's 5,000 ounces. You can trade the SIL for a quarter size, right? That's 1,000, and so on and so forth. So, that's some range trading in there, right? JT, I don't know if you've been looking at silver, but look at the chart. It's pretty well defined. 23.28 about 25.50. Not a bad deal if you're interested in just trading the ranges in silver, and until it breaks out, which it will. I think silver is actually poised to break out very soon here. It's been in this range now for going on almost 2 months, and as we know, or you may not know, but I'll tell you now, markets. The longer the base, the higher, the bigger the space, or so this is poised for a big move. And by the way, the longer it stays basing, the move's going to be even more enormous. So get ready for that. There's various ways you can play it. Obviously, on a just straight breakout if you are in the futures market. But again, one of the tricky parts about trading futures on those breakouts, as we know, they are a lot. They're the tendency, they're a lot more prone to give you a false break and that type of thing. That's why options in that respect are a little bit more forgiving to give you a chance to capitalize on a major move if you understand the strategy. Okay. All right. So that's that on the silver. Copper also now pausing. We're trying to get long copper, by the way, on a pullback, just so you guys know. Around the $4 area. And then there are, I did discuss in our class last Tuesday, we had a level up around 450, which could be a shorting opportunity, especially if the dollar, I think this also has a little bit of a dollar kind of tendency to it. So if the dollar does rally, I think copper and all the commodities really will have a pretty meaningful pullback. So now, jumping to the energies, I think I just mentioned we did a volatility play, again using options. Looks to me like oil. If you look at your charts, we've been talking about this 82, 83 resistance area. We've come up here various times. It seems to me like this thing is poised again for a break, a hard break above 82. If it does that, I think it's got a clean shot into the low, probably into the 90s, 90, 91. It did pull back to this week, if you recall, right? We had a really strong rally. We came right up to 82.50, pulled back hard, and right back up again. Looks pretty, similar to the stock market. Looks like, I can't keep that thing down. And so I think it's poised for a break above 82. And I think it's going to be a powerful move I have no idea. Fundamentally, still longer term. I'm still uh, very bullish long term on oil, as you know. But that doesn't mean we can't have these big swings too, as well. So, anyways, okay. All right. Let's see. Nat gas. Again, uh, I've been talking about nat gas, boil, UNG, um, and it just cannot, kind of just went sideways between 354, took another leg down. Looks to me like now we're going to test three MBTU on nat gas. And if that doesn't work, then I actually had somebody ask me. I was on a Zoom call with one of my members today, and the question was, well, isn't nat gas like at all-time lows? And you guys know the answer to that. No, nat gas actually traded down to 1.5 MBTU, and we're sitting here at 3. So do you think? I mean, so is there a potential that nat gas could trade down to 2, or 2.5, or 1.5? Absolutely. But here's the thing. I don't know how many of you guys take natural gas like we do here in California, and a lot of parts of the country. I don't know if you guys have been watching your bill. Literally, it's gone up by tenfold, right? 10x in the last year. So how do you basically square that with the price of nat gas essentially at $3? It's lost since it peaked at 9 a couple times last year. It's really interesting, right? Where's that coming from? So just kind of an interesting. So I do believe this is largely driven by, there's some constraints, and also Europe, I think, is the big deal. Europe has had a very, very warm winter. They stockpiled, last year after the Ukraine thing, but eventually that's going to change, and or if the weather changes. But all in all, supply and demand still in the favor of the supply right now in LNG. So we'll see what happens. I think there is going to be a tremendous opportunity at some point. We've had these kind of situations before. At $3, I think that's really going to maybe that sets up worth a shot. That's where we're looking at, and we're going to do that either with boil or maybe UNG, but I'm leaning more towards the BOIL, which is the leveraged ETF. So if we're right, we can maximize the upside if it works, right? I mean, obviously there's no guarantees it's going to work, but I would rather do it with that. And also maybe futures. I mean, we attempted a futures trade, took a really tiny risk on it, and didn't work out. So we got to give it one more shot. We did buy it last September and made a nice trade on that, but clearly it's just been kind of grinding itself lower. So we'll see what happens. In regards to the grains, just finish up here. Nothing new in the grain markets. Very similar. Lots of range trading. So, if you're out there trading right now, unless you are super flexible and super nimble in regards to all these markets, it's a bit of a challenge, right? And so if you do have that flexibility, I think you'll be okay. Meaning that you can't be dogmatic like I talk about. When the market's down, you probably want to be looking to buy it. When the market's up, you want to look to sell it, rather than get super chasing on the upside, or getting super bearish on the downside, because that clearly is not working right now. Okay. All right, everybody. I'm going to get out of here. Have a great weekend. Again, if you want to sign up for the newsletter, want to have 5 free days, or have any questions for me, support at transparenttrading.solutions.com, and I will make sure and reply to you. I've been getting a lot of inquiries lately. So, and then again, I have a class coming up. I'll start tweeting about it probably tonight and over the weekend. It's an options class. So if you guys are interested in learning about options, go ahead and uh, it's a free class, so you guys can sign up for that. That's a week. That's on next Thursday at 4 p.m. Pacific, 7 Eastern. Okay, so look forward to that. Other than that, have a great great weekend. Next week we have a bunch of earnings and more of the same. So we'll see you then. We'll see you on Tuesday. Okay, take care, everybody. Have a great weekend.